So for those of you asking for a strategy to grow your small account, okay, I will recommend this strategy, this spike catching strategy for crash and boom. Since you are using a small account, you can use this strategy and make crazy amount of money. I have a strategy that you can use for step indexes, for volatility 75, for crash and boom, and also another strategy for crash 1000. Yes, I'll share with you today that for crash and boom to catch spike. So for boom, you will be buying, and for crash, you will be selling. So let's dive into my chart. This is a small account, 170k account. So I will just show you what you can do with this strategy. You use it on the 1 minute time frame. Yeah, or 1 minute time frame. You use it to catch spike. So if you were here just as this happened, as this red line crosses into the oversold level, from 10 below, you catch a spike. Yes, that is how this strategy works. I will explain it better, don't worry. But before I explain it, I want you to get the indicators for the chart. And in case you don't know what we are trading synthetic indices found on deriv broker. So to create an account with the broker, click on the link at the description of this video to sign up and deposit at a minimum of $5 and start trading. So make sure you subscribe to this channel and hit the notification bell so you'll be notified anytime I drop a new video for you to trade. So now these are the indicators. The first indicator I'm using is the average directional movement index. So the settings for it is the period 50, levels 0, 5, 10, 20, 35, 0 and 0. Then the star, you use the color of your screen for the style. Use the color of your screen. You can see my screen is white, so I'm using white. Then for the positive DI, use green. Then the negative DI, use the color of your screen as well. So you can see positive DI, I'm using 1 pixel, negative DI 1 pixel. This is 1 pixel. Sorry, I'm using 2 pixel. This is 1 pixel. This is 2 pixel, this 3 pixel, and this 4 pixel. So I'm using 1 pixel, 2 pixel. Then for the style, 2 pixel as well. Click done. So the next indicator is commodity channel index. Period, set it on 14. Apply to typical price levels, negative 100 and 100. Then for the style, also 2 pixel. Then you click done. You can take a screenshot for those settings so that you can easily set them after you are done watching this video. Then for the moving average, the next indicator is moving average. As you can see, the period is period 10, shift 0, method simple, apply to close. Then the star, you use 4 pixel, color red. Then you click done. The last indicator is market facilitation index. The volume, set it on tick. Levels, you just ignore the levels. We're not adding any levels. Then the MFI up, for the volume up, you use green. MFI down, for volume down, use black. MFI up for volume down, use black. MFI down for volume up, use green. You can see. Then you click done. That is it. So using this strategy, wait for this red. Once you set those indicators, guys, your screen is going to be exactly like mine. So then another thing is it works on 1 minute time frame. 1 minute time frame, please. 1 minute time frame, don't forget that. So once you set your indicator, it's going to look like this. You want to wait for this red line to push down to, you can see after a spike it goes up, the red line pushes up. So you want to wait for the red line to come down just like this. You want it to come below this 10. So once it comes below this 10 and crosses below this red black line, you will be taking your buy, right? And crosses below this black line, you will take your buy just like this. Boom. You take a buy. And if you take a buy, let me show you the next thing. Guys, if you take a buy, you see this black bar here, this black long bar. If you take a buy and then you see that spike, you see that spike, guys. The moment you see that spike and you realize that it formed a black bar, wait, it indicates that another spike is going to happen. Then if you waited here, you catch the spike again. And then once you see it formed a green bar after the spike, you exit. You don't hold that one again. So that's how this strategy works. So let's assume you now trading a small account, let's say $100 account. And then let's trace this, guys. I just want it to be accurate. Let's say this guy entered from here. Tracing it here, it's gonna be this third candle. So let's say you entered from here, and then your stop loss was here. So which means, because since it's $100, you can risk up to $10. That's 10%. That means you have 10 chances to trade before you might lose your account. You understand? So 10 chances, that's a very fair way of trading. You don't have to be risking 1%. It's too small, except it's a robot that is trading the account. So let's say 5 lots. Okay, 4.5. Okay, so this is it, guys. So let's say you are risking $10 because the trade is here, stop loss is here, and then after the first spike, it got here, you were already up $4, and then you waited for another spike, and then what happened? It spiked here. You saw it was a blue bar, you took profit of $40. I hope you get what I'm saying, guys. You took profit of $40. So that's what I'm saying. So if you are taking that, you have made $40 from there, and grow your account. So that's just exactly how the strategy works. Let me show you for how it works on Crash. So on Crash right now, this is it for Crash 1000 index. I think I'm gonna be taking this trade now because this guy for Crash 1000 index, you want it to go above 80. Once it goes above 80, then you can take your sell. That's how we do it here. So for this guy, I'm going to be taking the sell for Crash 1000 index. But let me first explain. So for Crash 1000 index, you want to see this red moving average cross above this overbought level. I usually wait for it to get to 80, then it spikes. If it gives you green bar, please close your profit. But if it gives you black bar, it indicates that it's gonna spike again. But for this guy, it didn't spike. So let me show you past examples so that you get to understand that for Crash. So for Crash, look at it, crossed above, and then it spiked here, gave a black bar, pushed up, gave a spike, black bar. Look at it, black bar here, spiked again, black bar. Then that was it. So before I miss this opportunity, guys, let me take a trade here. I just want to take this one. Okay, I'm opening 2 positions on this. So if time permits, I'm gonna wait for this one to, guys, instantly, I just know it was gonna happen instantly. You see what I'm talking about, guys? Instant spike. So for me right now, let me close one of it, so I'm gonna wait for the other one. Why am I waiting? Because it created a black bar. So that black bar means that it's gonna give me another spike. So I'm gonna wait for it again. Instant spike. So this is what I was explaining on this video about the spike. So that's it, guys. So let me just show you more examples on this strategy, how it works. So this is one very beautiful position. It crossed above it here, crossed above the black line here, and well, it spiked massively to the downside. Another example again is here. Crossed above, spike, crossed above here, spike. So that's how you just be able to catch the spikes. And just one thing I will always advise is have a target every day. Have a target in a day, so that you don't get to just be on the market every time. Just have a target. If you are probably trading a small account, just probably target maybe 20% every day, or 30%, or 50% every day, even up to 100% every day. Just target, and that's it. Do it consistently every day. You'll be making money from it. So this is a strategy that you can use to grow your account. Thank you guys for watching. Make sure you hit that red subscribe button and like this video. Join our Telegram channel, guys. Join our Telegram channel. We drop signals there. Peace out, guys. Don't forget to create an account with Deriv and deposit as low as $5 to start trading with Deriv. Click on the link at the description of that video to create an account right now.